You're listening to the Cash Podcast, creating affluence, success, and happiness with your financial surgeon, Adam Koos, President and Portfolio Manager at Libertas Wealth Management Group at libertaswealth.com.
Happy Friday, everyone. Today we're talking about some of the big distractions and brain trash that you get peppered with every single day through your TV, radio, and now even your smartphone. I want to teach you what to look out for and how these pitfalls can literally ruin your retirement plans. And then last, we'll go into some solutions to these problems so that you can experience a successful and ideally a stress-free retirement. But first, as always, a few housekeeping items. If this is your first time listener or watching, thank you so much for joining us. The Cash Podcast is produced weekly, and as stated in the intro, Cash stands for creating affluence, success, and happiness, and that's our mission. My hope is for you to learn a little bit more on each and every episode so that you become more successful, wealthier, happier, and more educated than you were before you started listening today. So please come back often and feel free to subscribe both on iTunes and YouTube so you can get these updates and alerts as soon as our podcast and video vlogcast comes out. You won't have to wait for the email. In addition, you can also follow me on Twitter at Adam Koos and on Instagram at Financial Surgeon. And then last but not least, all links, visuals, charts, and other educational resources are always available on our website, although we will not be having any charts or visuals today. So we're just going to be hanging out and having a little conversation around, I would say, the fire, but it's entirely too hot to light a fire. So let's just go ahead and get started. So I always like to start with a quote, and the appropriate quote today is from a guy named Peter Diamandis. He's an author, been very involved in the space exploration programs this last decade, and I had an opportunity to see him speak several years ago. Real smart guy, and his quote goes like this: "Bad news sells because the amygdala is always looking for something to fear." Now, I don't know if that's true for all of us, but I know it's true for some people. I think that, at least for me, I'll say that I love scary movies because I like to be scared. Of course, I don't want that in real life. I don't actually want to be scared, but I think that scary movies or freaky movies, especially the ones that don't jump out and, with the boo to scare you, but the ones that kind of freak you out, I like being under, watching a movie and kind of going off into a fantasy land and feeling like I don't know, what would be the word? I guess feeling under stress mentally because of fear. And that might sound weird, but I've always loved scary movies and suspense movies and thrillers. Obviously, when it comes to investing and retirement planning and financial planning, this is what I do for a living. I've been doing it for 20 years now, so I don't really worry too much about too much in the economy, the stock market, and so on. I'm a lot more binary and robotic. But, there are things that concern me about this country, of course. There are things that I worry about. For instance, our government debt. I worry about interest rates. I worry about inflation and things like that. But they don't scare me and they don't keep me from investing money, or they don't keep me from being successful in my own retirement planning because I've been trained professionally my entire career to focus on what matters and avoid the things that don't. So this might not apply to all of you, but some of you may have this feeling that you are fearful because of something you hear on the radio or something you hear on the news, on TV. It could be local news, it could be national news. It could be something you've read. It could be something you see on your cell phone, articles, podcasts. There's no shortage of things that cause us to step back and reconsider decisions that we might make that would otherwise be good for us, but because of that fear that comes in. By the way, I'm sure you've heard this before. Many of you have probably heard this, but fear, an acronym that's been created for fear, is false expectations appearing real. FEAR, so false expectations appearing real. That's what fear is. It's many times, not all the time. I mean, if you're being chased by a bear, that is fear. So that's real fear. That's not a false expectation appearing real. That's a real expectation that you're going to be lunch. But anyway, let's jump into the meat of the material here because it's going to be a pretty quick podcast. And I want to get right to the core of the problem, and that is that there is just this plethora of brain trash out there, and there is always stuff just coming at you from all angles, whether you realize it or not, especially in this day and age with social media. Companies, websites, Google, these advertisers know exactly how to get to you, and they know exactly what to do to get you watching more YouTube. get you watching, reading more articles. We call it clickbait. You read an article, and then at the bottom of that article, you see something that looks interesting. Well, that's not the same article that's on your neighbor's cell phone. It's whatever interests you. And the next thing you know, you're reading articles, watching YouTube videos, or you're going on and on and on. Before you know it, you've got all this time that's been wasted, and now you're just more fearful than you were when you started reading. So the plethora of brain trash begins with fear mongering. People, the news especially, and I'm not picking on the news in terms of broadcast news stations, local news, or anything like that. I'm saying in general, advertisers, news on your phone. If any of you have ever received a letter or an email that says something like, the subject line might say something like, read below and avoid the next market crash, or these top 5 stocks to invest in for the next 10 years, or something like that. It'll say something like, that's not really fear mongering, but there'll be something in an email that says, if don't miss out on this message, it could save you millions of dollars of losses, or something like that. And then what happens is you go into this article, and it takes you an hour to read it because it's so long. And then at the end of the article, you click. Then they want you to click on a video, and you click on the video, and it's one of these videos where you can't pause it, you can't rewind it. It just gets playing and playing. You might be able to pause it, but you can't rewind. You can't change where you are. You can't skip to the end. You have to watch this video, which many times are 45 minutes long, 60 minutes long, sometimes longer. After the video, it takes you to another article or another page where you have to read more. And then the next thing you know, they're asking you to subscribe to some newsletter or paper that's going to give you all the answers to all your wildest dreams. You'll never be fearful again because you have them watching your back. They're going to tell you what to invest your money in. You're never going to lose money, and you're just going to make millions. It's going to be easy now. And obviously, we know that's not true, but that's the kind of marketing that gets sent out there. Is they start with fear mongering to scare you, so that you click. And then they continue with the fear, and then everything they say kind of sounds like it makes sense. It's at least it's realistic. It sounds like it could happen. So, for instance, this is one of my favorites that I've ever heard, and I hear a lot of these. We have clients that email us and say, "Hey, have you seen this newsletter going around, or have you seen this email going around?" So we see these things, and this one that went out, and I can't remember what year it was exactly, but I should have looked it up before I started today. But this article, again, it was one of these long articles. Then you had to watch the video, and then if you signed up for this research, then they were going to solve all your problems. And it was about this bill. It said there was going to be a congressional bill that's going to be passed this summer, not this summer, but this was years ago. And when it gets passed, it's going to cause a collapse in the U.S. dollar like we've never seen before. And it used words like that, which you're thinking, oh my God, maybe I should look at this. Maybe this is something that they really do know about that I don't know about. And they go into the bill and they explain details. 2 things. First of all, if there was a congressional bill out there that was going to be signed, or might be signed even, that was going to cause a collapse in the U.S. dollar, the dollar would already start going down. It wouldn't wait for the bill. In fact, it would come out as soon as the news came out that this was going to happen, the dollar would start going down. So it's silly, honestly. And then second of all, what's funny about this, and I guess this is what makes it my favorite that I've read ever in my career, 2 decades is my favorite, is because as soon as this supposed bill was to be passed, which I guess it did, I don't know, in July of that summer, the U.S. dollar went up faster than it ever has in history for the next 6 months, maybe longer, I can't remember. But the move that the dollar made was the exact opposite of what they predicted. And of course, who knows how many people wasted their time reading this article, watching the video, and then wasted their money paying for the subscription, probably reading more articles, watching more videos, only to end up with an idea that didn't even come to fruition. But the newsletter, they got more subscribers, I guess. So anyway, I just don't know that things like that make a whole lot of sense in terms of spending your time on things like that. Or like this, the most recent one I saw said, these are the top 3 investments to buy based on our magic formula. If I don't know what magic formula exists, because there isn't one. And I guess I apologize that I'm sitting here pausing and sighing on this podcast, but this stuff just frustrates me to no end. I have a huge passion for ethics and just, stuff like this just drives me nuts. I mean, don't get me wrong. I understand that and anytime you write something or record something, I mean, this podcast, for instance, I can't remember what I titled it. Avoid brain trash and become a better investor. You want to have a headline, anybody does, that's going to catch some eyes and so people want to watch it, people want to listen to it. That goes without saying. But saying you have a magic formula that's going to give you these top 3 investments, that insinuates that there's something literally magical about their stock screening technique or something like that. They don't say guaranteed results or anything, but it sure does sound pretty freaking amazing. So anyway, this kind of stuff just bothers me. Another one, no-brainer stocks to invest in right now. Again, it doesn't say guarantee, but no-brainer insinuates a few things. It insinuates first that it would be stupid not to buy them, which how do we know that we should buy these stocks? How do we know how old the person is? How do we know if you're writing this letter? I'm saying, how do you know how old your reader is? How close they are to retirement? How much risk they're willing to take? Maybe there's somebody who they're really conservative, but you're telling them that you've got a magic formula and that would be a no-brainer not to invest in these stocks. So they might feel like they should because it'd be stupid not to. I just think that a lot of this stuff is brain trash, and then you try it doesn't work out, and you get really frustrated, and of course, you're justified in feeling that way. And then last year is, I would say, CNN, ABC News, CBS News, CNBC, which is obviously all financial news, Fox News, MSNBC. They all have the same goal, and that is for you to keep watching more news. The websites, Facebook now has articles all over it. Their goal is to keep you on Facebook, keep you paying attention, and keep you scrolling through Facebook looking for more information, whether that's videos, YouTube, obviously we talked about earlier. But the news, radio, it's all the same concept. They need listeners. That's how they get paid. Ratings. Ratings are based on the number of listeners or watchers, viewers. And if they're not doing the right things to keep you paying attention, then, well, you're not going to pay attention anymore. And if it's not exciting enough, then chances are you're probably going to go do something else with your time. So that's the core of the problem. Now, let's talk about the problem itself. So this brain trash, the things that happen throughout the day that you listen to, you watch, you read, it creates mistakes. It creates people to go through what I'm sure you've heard before, something called paralysis by analysis, where you think about doing something, you think about it, and you just don't do anything. You put it off. So that's the next one. Procrastination. So this brain trash can cause procrastination, where you say, I'll buy this investment, or I'll invest my money the next time the market drops. And then, of course, the market drops, and you want to wait for it to keep going down, but then it doesn't, and then it goes back up. Or when it finally goes down a lot, it comes right back, let's just say, which is pretty much what the market's done for the last 13 years, is go down and come back within 4 months. So you're waiting for the next big, long market crash to invest your money, and then it just doesn't happen. Another way you can procrastinate is saying, I'll sell. It's the opposite. I'll sell when it comes back to X. So if you buy an investment and you bought it at $50 a share, and you said, if it drops below 46, I'm out. I'm selling it. But it goes below 46, and you say, I'm going to wait till tomorrow and see what happens. And then it goes down to 45. And then you say, I'm going to give it to the end of the week, and now it's at 44. And then all of a sudden you say, well, you know what? When it gets back to 46, I'll sell it. But then it goes to 45 and never gets back to 46. Now it's going down to 43. 42. Now, then you say, well, you know what? When it gets back to 45, I'll sell it then. I'll sell it when it hits 45. But it goes from 43 to 41 to 40, and maybe it bounces to 44, but never to 45, and it keeps heading lower. So in other words, you keep saying, I'll sell it. I'll sell this bad investment I own when it gets back to X, but it just never gets back to that number, or at least it could take years before an investment gets back to where you purchased it. Another kind of procrastination, and this is again back to news, just an example, by the way, I'll invest after the Afghanistan situation is over with. So once the Afghanistan situation is over with and that's all calmed down, then I will invest my money. But until then, not touching anything, not investing my money. I'm going to leave it in my bank account, my savings account, my money market account, whatever, earning 0.4% that I'm then paying taxes on if it's not in a qualified account. Or Another one. I'm going to invest after we see what happens with this whole inflation thing. I'll invest my money after in 2022 because I think that the dollar is going to collapse because of inflation and the interest rates are going to go up. Or interest rates are going to be go down. I mean, and so before you know it, you're reading all this stuff. Again, it's the core of the problem is there's too much information coming at you, and then much of it conflicts, of course, but it causes this paralysis and procrastination to where you don't make a decision. Another example is putting off the sale of your business. If you own a company, it's kind of, or you could say selling your home. I'm going to wait till the market goes up a little bit higher, then I'll sell my home. I'm going to wait until I'm going to wait until I finish these few projects at my company, and then I'll start doing a value assessment, and then I'll start planning the sale of my business. I'm going to wait until I get back from vacation, and then I'll update my estate plan. Then I'll update my trust, my will, and so on and so forth. So there's all these reasons why we want to put this stuff off because we don't want to deal with it. And then what ends up happening is we just don't make a decision. And one of my favorite quotes, I can't remember who I got this from years and years and years ago, but not making a decision is a decision. For a little while, in the very beginning of the decision-making process, you can call that analysis. You can call it due diligence if you want. But at a certain point, if you've done a bunch of research and you're still mulling things over, and you haven't come to a decision, you have decided not to decide. You've decided to keep thinking about it and keep analyzing. So how do we fix all this stuff? How do we, I mean, obviously I've illustrated the problems, but I haven't told you what to look out for and how to fix it. So what's the solution here? To get over this hump, this procrastination, the fear mongering, the things that make us nervous, stress us out. First thing is, and this is huge, a consultant that I had paid years and years and years ago that worked with me for a few years in my business told me this one thing, and it's so true. And it was really, when he told it to me, it was about email. But it wasn't so much about research. But he says, I'm saying here, go and find your research. Don't let it find you. In other words, if you have a bunch of free subscriptions to market newsletters and stock updates and videos and subscriptions to, a bunch of different advice. Go in the next time you get one, and every time you get it, unsubscribe. Turn it off. Of course, I'm going to be biased and say that you should keep watching and listening hours, right? Of course. But a lot of the stuff that is not unbiased, sorry to use a double negative, so a lot of the stuff is biased information that's just looking to get your money and isn't really providing any good, true, authentic education. So when I say go and find your research, what I mean is instead of having a bunch of stuff hitting your inbox, distracting you and overwhelming you to where you're chained to your email inbox, when you want research, go get it. Go online, Google the research that you're looking for and find it. And that leads me to the next tip here. The next one is don't look for research that corresponds with your opinion because you're going to find it. And what I mean by that is if you believe that this is the best time to invest your money because the stock market is going to go soaring through the end of the year, all you have to do is do a Google search that says what to buy, what to invest in for the last half of 2021 to take advantage of the bull market or to take advantage of the market going up. And of course, you're going to find all kinds of research that's going to support that opinion that the market's going to go up. And you're going to find tons of things that will lend, plenty of information to your ear or to your eyes so that you can maybe, whether it's free or not, but definitely so you can pay for some advice. And then, of course, if you think the market's going to crash this year, which is probably the more popular opinion for those who are looking for research anyway, you can go do a Google search. And it says how to avoid losing money when the market crashes this year, or how to avoid losing money in my retirement plan because of inflation and a falling dollar. And if you do that, you'll find all kinds of things that again, no shortage of opinions that support your opinion. So don't look for research that corresponds with your opinion. Just research unbiased stuff. You cannot have an opinion in investing. You cannot like an investment. You can't say, I really like this stock. or I really like this ETF, or I really like this bond, because the bond doesn't care whether you like it or not. And whether it goes up or down has nothing to do with whether or not you like it. Don't say, I really hope this is going to go up, or I hope it's going to come back, or I'm going to stick with this investment because, I've lost a lot of money on it, but I'm just going to stick around because I feel, that's another one, feel, hope, like, think, I think it's going to come back. I feel like it's really going to, it's got a good story or something like that. Stories don't matter either. So you got to look for unbiased research. And then less is more. So the next tip here is don't make it complicated. Less is more. Only invest in what you have the time and ability to follow on a day-to-day basis. You should be paying attention to the investments you own, not daily, literally, but if you're managing your own portfolio, I would hope that you have some sort of exit strategy on the investments that you own and that you're looking at it at least weekly. And then you have maybe alerts set up daily. So if something happens intra-week, then you have you're paying attention to it. And that leads me to my last tip here, which, if this doesn't sound fun to you, if this all sounds stressful, then hire a professional. Interview a few fiduciaries. I'm going to be a little biased there and say I wouldn't hire a non-fiduciary, but look for a few fiduciaries. You can go to napfa.org. That's the National Association for Personal Financial Advisors, or let me try to do that. NAPFA, N-A-P-F-A, yeah. So punch in your zip code, and there'll be a bunch of other fiduciary financial advisory firms like ours that are near your home or your office, depending on what you're looking for. And if you like managing your own retirement plan, there's nothing wrong with that. You just have to have two things. You have to have the time, and you have to have the interest. And what we found is that because you have to have both, even if you like doing it, if you don't have the time, it's probably not going to work in your favor. But especially if you don't really truly enjoy it, then you're probably not going to spend the time on it. And if you don't spend the time on it or don't have the time, then the results probably aren't going to pan out as well. So, and then always remember that with the right firm, the right professional, that the relationship is a partnership, not a dictatorship. So if you pick the right firm, if you pick a fiduciary and you vet a couple of them out, sit down, find who you got a good fit with, somebody you feel like could be your partner through this, then what you're doing is you're hiring basically a personal CFO for your family, or if you're a business owner, it's like a personal CFO that works alongside you and your company, your 401k, and to help you not only, of course, improve your life and retirement plans going forward, but also to help you when it comes to selling your business someday if you have that interest. So I'm going to go ahead and stop there for the day. Feel free to share this episode with your friends and family. And if you'd like to discuss your personal situation further, always remember that you never have to be a client to ask a question. If you'd like to set up an intro call or a Zoom meeting, again, even if it's just to ask some questions and get to know each other, head over to our website at libertaswealth.com and you'll get access to our calendar there. Or you can just email us at info@libertaswealth.com and we can take care of setting up something with you directly. As I always say, there's thousands of podcasts out there, and you chose to give ours a listen today. So thank you so much for tuning in. Be sure to subscribe on both iTunes and YouTube. And remember, again, you can sign up at libertaswealth.com to get not only these updates, but our other screencast videos, articles I mentioned a second ago, all of them delivered directly to your email inbox as soon as they come out. Feel free to follow us on Facebook at facebook.com/Libertas Wealth. Again, I'm on Twitter at Adam Koos, as well as Instagram at Financial Surgeon. And so thank you again so much for joining us, and we'll be seeing you next time.
Thank you for listening to the Cash Podcast with your financial surgeon, Adam Koos. To see any charts or images that were mentioned in this show, or to check out additional articles, videos, and other educational resources, head over to libertaswealth.com.